Hey everyone, it's Kirk here again at Option Alpha. So look, I'm on the hunt for a new 1 DTE options trading strategy. I've not found one yet, but I wanted to do this video. This is part one of maybe 2 or 3 parts in this series where I just wanted to do a behind the scenes, how I go through the process of finding a strategy, what I'm doing for backtesting, how I'm managing this, how I'm documenting this, how I'm taking notes, everything. I get a lot of questions on this. I often tell people you need to spend time doing this, but I don't often, this is my fault, show you guys how I actually do it. So this is how I'm going to do it. I would love your guys' feedback. If you find variations that can help out in this process and we can all kind of collaboratively help each other in this, please let me know, add comments, add your questions, share it in the community, whatever, to the video so that we can help each other out. Again, this is going to be part one of maybe a 2 or 3 part series, depending on how many videos it takes to find a strategy. So, all right, so here's what I'm after when I'm looking for this strategy, just so you kind of know some of my goals heading into this. Number one is I want a strategy that's a 1 DTE strategy. What that means is that I'm already trading a couple 0 DTE strategies. So those are strategies where I enter the contracts, maybe exit the contracts or let them expire the same day that they expire, right? So I entered them, they exit today, it's the same day. But what I want to do is I want to add a 1 DTE strategy to my portfolio. This is so I'm not a one-trick pony for those of you who watched the previous videos on one-trick ponies. So this would be a strategy where I'm entering a position, say today, and I'm not exiting that position until tomorrow. Whether I take it for a profit or let it expire, whatever the case is, I'm not exiting the position the same day, which means, by the way, this is great for making sure that if you have a small account, you're not going to be flagged as a pattern day trader. I'm going to specifically force all the back testing to avoid pattern day trading, so not exiting the same day that the contract is entered. So the second goal that I have with this is I want to find a strategy that's pretty small in position size, of course, because I'm just very conservative, and I want a strategy with a lot of good metrics, a lot of good data behind it. I don't want something that's going to trade 4 or 5 times a year. I want something that's going to trade hundreds of times over the past couple of years. I want lots and lots of data behind it, but I'm not pigeonholed into anything. It doesn't have to be any particular strategy. Right now is kind of the discovery process of this, which does take some time. So I've already done a little bit of that discovery process. I'm going to show you how I do this inside of my backtesting and then how I kind of document it to kind of follow along. I haven't found a strategy yet, so I'm hoping to find one as we go through this video series here together. So first thing I'm going to start with is just this set of backtests right here. So what I did just kind of starting out was I just kind of ran with some ideas for a little bit. And this, I think, is a good place to start. It's like, conceptually, what have you heard? What have you seen in research? What have you read other people doing? And so my first initial thought was kind of this series of backtests that I started to run where I was doing like an unbalanced iron condor. So I was running these on SPX because they're all cash settled. But the first kind of like concept that I had was this idea of doing a next day SPX iron condor and basically doing a short put spread at like a 40 delta and a short call spread at a 30 delta. And then entering it in the morning. So I know I would enter in the morning. And I even thought to myself initially at some of these, like maybe I'll take profits early, right? Get a big fat credit. As that credit starts to mature or starts to decay, then I would take a profit early. And so kind of this first series, and I won't go through all of the different tests that I did, but probably about 30 to 40 kind of discovery tests, if you will, just kind of picking and choosing some random things. You can find some ideas in top back tests. That's a great way to do it too, and kind of get some themes and just kind of throwing stuff out there and seeing like what kind of sticks, what kind of makes sense, kind of back testing wise. And so this like first set that I did here, one of the first sets I did here, and I'll put a link to all of this stuff right below this video so you can go to every single one of these back tests, check them out yourself or rerun them yourselves or run variations of them. But when I first did this particular set, what you might end up finding is that sometimes nothing works, and that's okay. I mean, like to me, this is the discovery process. This is where you're kind of, sifting the wheat from the shaft, if you will, and you want to find something that works. And if you don't find stuff that works, that's good. Like that's not wasted time in trading. I would much rather spend my time doing this than just blindly trading a strategy I hope works and there's no real research or data behind it. Not that backtesting is going to be perfect for the future, but it kind of gives us some guidelines to work with. So this kind of really wasn't that, exciting for any of these different, kind of skewed tests. Not that there might be something in here, but there's just nothing here that was like super, super exciting for me. So what I ended up doing is I ended up finding this idea, or starting with this idea. And this is where I would say, once you kind of start finding something that you're gravitating towards, you would probably want to go down this process of doing it. At least this is how I do it. You can do it your own way. But one thing that I decided to do is I decided to do this idea of maybe $5 wide strikes. Like the short strikes themselves would be $5 wide. So essentially what I did here is I said, okay, well, maybe instead of, deltas, let's just do a dollar amount. And I just tried this, and some of them started to work out. So I thought, okay, let's kind of expand on this a little bit and, pull this thread as much as we can pull it. So the short put would be $5 below the underlying. The short call would be $5 above. Again, your goal here is to collect a massive credit, try to take in a little bit of risk on each position, not necessarily trying to pin the market, but just try to take in a big credit. And again, we would do $5 wide spreads, so we keep the position wide size very, very small. Now, something I did in all of my testing, by the way, just as a sidebar, is I included slippage on the way in and slippage on the way out. This was, again, I've talked about this a lot, but this is a no-brainer. There's no way we're going to get backtesting to be perfect with the future market. There's just no way to do it. But including things like slippage and trying to make it as realistic as possible is great. It can stress test your strategies. If you get better pricing, great. But if you don't, at least you're including some slippage. So every single test that I ran has slippage on the way in and slippage on the way out, even if it has no profit taking or anything like that. So this series here, the only thing I did different in this series of tests is I said, okay, well, what if I just trying to find something that kind of works, right? Like what if I entered a position at 9:30 in the morning and just let it expire the next day? So I entered a position Tuesday at 9:30 and let it expire Wednesday in the afternoon. Just trying to hold it overnight just to see what would happen. And my personal process for going through backtesting is very similar to this in that I want to start with a baseline assumption, which is, what can I do? Can I find something that just, if I don't do anything else, does decently well? So the baseline assumption usually for me is something like hold it till expiration, right? And then we can layer and add to this, as you'll see as we go through this video, we can layer and add to this some different, ideas or thought processes to try and improve the strategy. So first thing I did is I said, okay, let's try to find generally a time range where it seems to make sense. So 9:45 in the morning, then I did 10:30, I did 11:30, I did 12:30, but I removed it just so you guys can see some different ones. And then I did 2:30, and then I did 3:30. Now you can see visually here that it makes a big difference actually. So visually you can see that time difference actually makes a big difference. In fact, entering the position at 10:30 was the worst. You were actually better off getting into the position earlier in the day. The A result here was basically break even. It wasn't great, obviously, but it was much better than getting into the position at about 10:30 and letting it expire the next day. And so if you went from 10:30 to 1:30, 2:30, et cetera, you got better. And then eventually what I saw was this 3:30 time period was the best one. So that 3:30 time period became now my new baseline assumption strategy. And this is, I think, really important moving forward. It's like, once you find some of these things that kind of work, use that baseline as the new strategy moving forward to compare everything against. So here's how you would actually do it. So what you would do is when you would find a strategy like this, just go ahead, right click on this strategy, open it in a new tab in your window. You might have 50 Option Alpha windows open. And now that strategy is here. It becomes your new baseline version. And then you'll go up to compare, and that sits up at the top. And now everything from here is going to be compared against this strategy. So all your other test variations will continuously be compared against whatever becomes the new top line variation. Okay, so that's exactly what I did. So I took this strategy here, which was test number E in this case, and that became my new baseline assumption. And I tested everything off of this strategy, okay? So I said, all right, so at 3:30, we're letting things expire and we're doing $5 wide strikes. So the next round of testing, and basically I just moved this one to the top here. The next round of testing that I did, is just an idea that I had is, okay, what if I started to filter entries by opening range? And so what I'm trying to do here in testing, this is what I think is sometimes hard for people to do, and it does take a little bit of time to do it, but you want to try to isolate certain figures. Like you don't want to test 52 different things versus 52 different things because you really don't know what that difference is. Like what is the isolating factor that makes it different? So what I did here is I used that same baseline version, right? No filters, just hold it to expiration. That's the base. And what I started to do is I said, okay, can I improve this strategy by adding an opening range filter? So in this case, I added an entry filter that says don't enter the position if the opening range on the S&P is greater than -1 or greater than 1%. Basically, we get a big up move or a big down move in the day, don't enter a position. Now, my assumption on that is, or heading into this was, if we get a big move in the market, I don't want the market to have continuously big moves, which would naturally destroy the position. So my assumption here is I actually want calm markets, which are more likely to be followed by more calm markets because I'm holding the position a day plus, right? So that's why I tested here. And again, what I did here is I just relabeled all these. You can just click on the title, relabel it something so it's very easy to kind of work with here with these descriptions. So I said, all right, well, let me do a $5 wide strike with a 1% range, and I'll do a $5 wide strike with a 1.5% range. And then I also started to test little things here like, okay, let me do a $10 wide strike with a 1% range, and let me do $10 wide strikes with a 1.5% range. So instead of $5 below and above for your short calls and short puts, let's do $10, right? I'm starting to try to isolate some of these factors. Now, when I ran this, you can see that most of them did not improve it, right? So you actually had here that this was your, kind of your findings here. And this A strategy, 1% range didn't do anything. It actually decreased your total P&L. So you saw your decrease in total P&L go down there. You can, again, visually see this here just in the difference in these lines. C actually did marginally increase it. So it was actually interesting where test number C, which was $5 wide strikes and a 1.5% range, did marginally increase your P&L. It increased your profit factor. It increased or decreased your max drawdown, right? It also increased your win rate a little bit. You also traded a little bit less. So it definitely kept you out of some trading environments that probably were pretty difficult. They're very volatile environments. It kind of took the edge off of the strategy a little bit. And so you can see some of these metrics in here for these strategies. It increased our average P&L on the trade per contract from $7 to $8, right? So this is nothing, I don't know, it's just like a work in progress, right? So now you're using this and going, okay, well, obviously D and E, sucked. Those did not do really well. So $10 wide strikes, widening these things out, regardless of the opening range, really didn't work out. Okay, so now we throw that out the window. So now moving forward, C becomes our North Star. So this is the better one of the new tests or new rounds of tests that we would do. So again, what you would do is you would open C up in a new tab, go to that new tab, hit compare, and then you start adding your variations in here. You start creating new variations of this potential strategy, okay? So that's what we did here. So inside of this test result or this tab here, again, I'll have the links to all of these so you guys can see them in the video or below the video. So what we did here is we said, okay, this is the new baseline, right? The new baseline is 330 entry, $5 wide strikes, 1.5% range. Let's see if we can improve this. Let's try to do some different strikes, right? So the theory here now was, all right, the opening range thing, we really didn't find anything other than 1.5%, kind of curbed it a little bit. So we don't need to test that too much more. Maybe you could if you want to. But now what we wanted to do, or what I wanted to do, was I wanted to test different ways of using the strike selection. So instead of $1, I just wanted to quickly test, all right, maybe the dollar amount, $5 above and below, maybe that's stupid. Maybe I should do a percentage. So I did 0.5% strikes, I did 1% short strikes, and I did 1.5% short strikes. Again, all I'm doing here is I'm trying to isolate these factors. So this test is kind of isolating this criteria here just to see if this improves or enhances the strategy. And you can see every single one of these decreased the performance of the strategy. So all of these now go out the window, and we still use this one as our new baseline North Star metric moving forward, okay? All right, so now what I did is I moved that same strategy over to a new tab. Again, this is our same baseline strategy, $5 strikes, 330 entry, 1.5% opening range filter, let the position expire. And now what I started doing is I started testing some different profit taking levels. Now this one is one where I thought, okay, look, if I'm going to enter a position at 3:30 in the afternoon for tomorrow's expiration, maybe logically you're going to get a big decay overnight. So if you get that big decay overnight, if you do, then maybe it makes sense to take a big premium, obviously, and then you get a quick decay in the morning and you would take a profit in the morning. Now, entering these and kind of testing these, again, my goal with this strategy is not to do it as a pattern day trading strategy. I'm not going to enter it at 330 and take a profit at 345, or at least I'm not going to set it up that way. You could maybe test those ideas if you want to yourself. But what I did in these profit taking tests, and this is really important, is in here in exit options, what I'm doing is I'm testing the profit level. I'm also testing at least 2 consecutive hits at the profit target. The reason I'm doing that is it's a more strict way to test that profit taking. It means that you don't just get a random mid price around profit taking and the system thinks you can take a profit. No, we're going to require 2 hits, which is a little bit harder to get. Obviously, we're still including slippage, right? So we're still including those. And more importantly, we're telling it not to exit on the first day to avoid pattern day trading. So if you check this box, it'll make sure that you exit the next trading day. So if I entered at 330, even if I have a 10% profit by 345, I'm going to enter it the next day because that's the goal of my strategy. So again, that's what I'm setting up here for all of these. Now you can see that actually taking profits 10%, 25%, and I just kind of space these out to see if there's anything in here. Like, is there any range that we should then focus on? If the 50% range worked, then I would try maybe like 40, 50, 60, etc., and try to optimize it. But you can see here that actually everything did not work. So the lower profit taking levels crushed the strategy, actually made the strategy turn into a loser. You only did better, or not better, but you only did okay with a 75% profit, which is essentially the same as saying it was working towards expiring, right? So at this point, and this is kind of the fun thing about doing backtesting, I think, is like A is still the winner. So A is the champ in this round again. So we continue to move this thing out and test new ideas. So, okay, so the next thing that I did here is I tested a new set of variations. Again, I moved out A to its own new tab, tested a new thing. Now my thing here was, okay, profit taking done. Now what we're going to do is we're going to test something different. And again, we're just isolating different testing criteria. So now what I did is I said, all right, well, we already have an opening range filter, but maybe, and this was my assumption, my hypothesis, maybe if RSI is super, super high or super, super low, then that means that there's a big trend change. And again, there's this continuation or momentum that might happen. And I don't want to be trading in those environments. So I don't want to be trading in an environment where RSI is super high, may continue higher, or may reverse and have a big reversal, right? I kind of want to do mid-range stuff. So what I did is I specifically tested this. I said, okay, what if we also include that RSI has to be between 20 and 80? And then I'll do a test of 30 and 70 and 40 and 60, right? I did a test of 90 and 10, by the way, and it was exactly the same as expire. So there's no filter out for that. So it doesn't matter. But this is kind of how I isolated these out here. So I was just testing different criteria. And what you can see is, again, the results are pretty interesting. If you isolate RSI into 40, 60, it's garbage. Same thing for 30 and 70. Actually, for 20 and 80, it was okay. It actually marginally improved the strategy. You can see that the orange line actually was slightly higher than the other strategy. If we kind of dig into it a little bit here with the different tests, this being the baseline here, and then this one being the new 20 to 80 RSI, you can see it's slightly or marginally improved your total P&L just by a couple $100. If you look at just the position count, you basically stayed out of 3 positions that would have been losers. That's what it did. It kind of curbed it a little bit. So would I use it moving forward? I don't know. You could probably throw it in there if you want to, but it didn't dramatically shift things. So I don't know if we could, say, oh, this is it. Like, this is definitely, I don't know. It's one of those things that kept you out of a couple positions, maybe curbed it a little bit, saved yourself a little bit of money. Certainly could use it as the new, gold star moving forward. Okay. So what I'm going to do now is I'm going to do that same process that I've kind of talked through, but I'm going to do it on the screen and kind of do this last round in this series right now with you guys and test a new variation and show you how I kind of go through the process. Again, I hope that you guys add your comments, add your backtests. You can share your backtests here. Just click on the share button. When you run your backtests, add them to this video, add them to a community thread. Let me know if you find any other variations, and I'll test those and kind of still do this process in the next video as I kind of find a strategy that works. So let's go ahead and use this 20 to 80 RSI range. It doesn't hurt, I guess, right, to use that. So I'll open it into a new tab. that becomes my new baseline. I'm going to hit compare here. And so now I'm in the compare functionality for backtest. And now what I'm going to do is I'm going to go here and add a variation. Now, when I add a variation, it keeps all the same testing parameters in place, which is really important because then I can just tweak one thing at a time. I can essentially move one thing at a time. So what I want to do here, so I have these opening ranges, I have all of these. What I'm going to do is I'm going to add another, let's do actually another range here, and let's do a gap. I'm going to test a gap here. So opening range would be the opening range of the market or opening change of the market that day. So we don't want big moves up or down during the day for the market. We want generally neutral markets. But I'm also going to test an opening gap. And again, I don't know if this is going to work or not. I don't know if it's going to do anything. But again, my hypothesis here is that if the market jumps up, maybe it's going to continue to run that day. And maybe it's going to run for a couple days. So let's actually test 1%. We'll test maybe 0.5% too. So let's actually do this one as -0.5%. And we're kind of really narrowing things down here at this point. So again, there's other ideas we could probably throw in there, but let's test 0.5% here in range. And we're going to add that to here. We're going to say 0.05% gap. So we'll add that to our criteria here so our description runs. We'll let that run in the background. And this is all I did the other day. So you just add another variation from that. And wait, actually, you can see that the test in the background ran and it actually flatlined. So I probably did something wrong here. So let me just go here and edit this one. So let me just open this up and see what I did here. Oh, I actually tested gap -0.05 to -0.05. So basically an exact 0.05 entry. So no big deal. And actually, I'm glad I'm doing this so you guys can see it. If that happens and you're running a test, that's a valid test. It just had almost no entries, right? So you just go back in to edit settings for that particular test. And what I want to do is I want to take out the double negative there. So I'm going to do gap -0.05 to 0.05. So we'll go ahead and run that back test again. Okay, so that one should run correctly now. Let's add another variation here. And we're going to do -1. So we'll do 1% to 1 on the gap. We'll change this down here so we can keep our tracking in line and our descriptions, keep it organized. We'll do another variation here. And again, I'm running this right now. I have no clue if this is going to help or hurt or do nothing. Maybe it does nothing for the strategy whatsoever. And we'll do 1.5%. So we'll do that. And then we'll actually add one more. Let's do 2%. I don't know how many days gapped 2%, but if it did, maybe we throw it out. So we'll do 2%. I mean, certainly recently in the last month or two, we've had some 2% big days up and down. So could have gapped those ones out. And we'll do 2% gap, and then we'll run those. Okay, so now look, all of these are running right now. What I'm going to do is just kind of pause. We'll come back when all the tests finish. But this is what I would do in new tabs. I would take that same strategy, whatever that baseline strategy is. You see I'm just adding variations to this. And then once those variations are done, I can analyze the results, kind of go through them, which I'll do with you guys. And then I can use it as the baseline moving forward. I can pick a new one, or if that same one wins, I just move that same one over, test a new idea, test a new thought process, see if we can improve the strategy at all. All right, so those results finished running, and it's actually pretty interesting where most of the results didn't dramatically drop, which was interesting, which means there probably wasn't that many days, but it did look like it improved it in some places. Now, again, when I look at this, I kind of see two different things, like going back to the one with the RSI range, where sometimes you see they dramatically change the results, which is kind of interesting. Same thing here with profit taking, dramatically changes it. Here, you're starting to see that we're starting to hone in on it. So we're not getting a lot of variance in the strategy, which means that at its core, it's still working. It's just that these differences are starting to become less and less pronounced. So we're not getting these bigger differences, which might be good, right? So here you can see there's definitely some ones that maybe marginally helped it and some ones that didn't. So let's go through the results together. Again, we're testing the opening gap here at different percentages. If you go down here and you just kind of test them side by side and look at the metrics, A is going to be our first one. This is kind of the winning strategy as it stands right now. And total P&L was 54, profit factor 1.14, win rate here. You can see the average P&L down here is about $8. If you go here, you can actually see that test number D actually did improve things a little bit. So we went from 54 up here to 56. We saw a slight decline again in our max drawdown. Our lowest P&L was a little bit lower, or, higher, which was good. Our profit factor starting to inch up, which is good. Our win rate was a little bit higher. It did keep us out of a couple more trades, which again is what it's starting to do. It's starting to kind of filter out some of those really far out trades. Again, D in this case was a 1.5% gap, which is actually very interesting if you think about it. If you did like a 0.5% or a 1% gap, which would be B or C here, it kept you out of a lot more trades compared to test number A. The problem is that ultimately you got paid to be in those trades. So even though those markets were pretty volatile, it was actually better to be in those trades. Now, it wasn't as good to be in the really, really volatile trades, the ones that were 1.5%. So that's where I guess, D actually ended up working out and kind of marginally improving the strategy. So if we go down here, you can see the P&L numbers started to get, again, a little marginally better. We started to improve our average P&L pretty much across the board. Here was about 8. We started to improve that. Return on risk was a little bit higher, right? So like these are all good things that we want to see. We want to see some of these metrics start to inch up as we start to add these different variations. So I would say moving forward, of course, that D becomes the new baseline and model. So if I wanted to test new variations, again, I open D in a new tab. Again, we'll have all of these links here for you guys so you can see them. Open D in a new tab. This becomes the new baseline. Hit the compare button. And then you would add your variations just like we did. And that's how I've been going through this backtesting. I won't do it here, but I will give you some ideas on some things I'm probably going to test. Maybe if you guys have any other ideas, I can switch it up in the next video. But at this point, I think that I've kind of tested a lot of different things here for this strategy. So my thought process here with testing now is going to be to go back to square one almost to a certain degree, which is that, okay, I found this strategy that generally works, seems to be okay. Now can I test other variations against this? So originally, like way back in the beginning, I was just kind of throwing stuff against the wall. You might do this. You might have ideas of things to do. You're kind of throwing stuff against the wall. Now you've got something that's good. Okay, now let's test completely different ideas again, just to kind of throw more things at it and see if anything breaks out of this. And then we can go down that rabbit hole of that particular strategy, just like we did with this one. So remember in here, we kind of found one that worked at 330, just leaving it to expiration. So then we kind of pulled the string on that and went further down the rabbit hole, and we got to this one here, which is this one here is about $5,600, right? Pretty decent strategy. If you actually go here, this one at 330, this kind of like baseline that we had was about 5,000, profit factor about 1.2. So we've actually improved that a little bit, going up to 5,600, profit factor of 1.5, right? By just making these kind of logical adjustments and tests into the system. So I would probably go back to the drawing board. I'll probably do that in the next video where I just kind of test some different ideas. If you guys have different ideas, let me know in the chat. I would love to know that. So the last thing that I'm going to do here is I'm going to show you guys how I kind of document this and keep tabs of it. What I like to do personally is I just keep a just simple notes file or text file, and I just document it here. So I would say 1DTE strategy like this. I would do just a quick note about anything that I'm testing. So in this case, it was testing different entry times during the day. And I keep a lot of these because I want to have them as a quick reference in case I need to go back to any of these tabs or I lose any of these tabs, right? I want to keep some of these. Then I do like testing different percentage change ranges, testing different short strike selections, different profit targets, a technical RSI add-on. And so this last one here would be testing the opening gap. And I would just simply go up here to that test. I would grab and click the share button up here. And this is how you'd share with your friends anyway. And then I would go here and I would simply copy and paste that in. So now I have that as my new kind of baseline here. You can also keep a copy of the individual test, whatever that one's the best test. You can do it that way. But I do it this way because I just want to keep that documentation here so I can see it. Again, I'll put all these links in the video right below so you guys can grab copies of them yourselves and do different variations. But this is kind of my process. So this is, I guess, behind the scenes of me trying to figure out how I'm going to find a 1DT strategy that kind of fits my parameters. Like I said, I'll probably start with this one moving forward. Maybe I'll do this in a different video, just kind of show you guys how I'm testing new thought processes and kind of testing new ideas that I see. If you have any other ideas you want me to test or you think would be good, or you're running a good strategy and I can test them here, please let me know in the comments. That'd be super helpful. so we can just kind of crowdsource some ideas and figure out if something is going to work. If it does work, then we're going to eventually find a bot that we're going to turn on, and we're going to run that bot. I'll create a template of that bot, share it into the community. You guys can have access to that as well and create your own versions or variations from it. But I really hope that this video helped kind of go through this process of backtesting. I know it sometimes feels like it's a lot of work to do backtesting, but it's actually pretty fun just to go through and kind of compare some different things and let one strategy be the winner and test different ideas and thought processes around backtesting. I hope it was really helpful to go through this. If it was, let me know in the comments, like, share the video, etc. And until next time, happy trading.